This episode is brought to you by Merrill. Join one of the most iconic names in wealth management, Merrill. You'll be part of a dynamic team of advisors and specialists working hard every day to grow their clients' wealth. And with the support of best-in-class research, advanced digital tools, and the resources of a global institution, it's truly an opportunity you can be bullish about. Learn more at careers.bankofamerica.com. Copyright 2024, Bank of America Corporation.
Ryan Reynolds here from Mint Mobile. With the price of just about everything going up during inflation, we thought we'd bring our prices down. So to help us, we brought in a reverse auctioneer, which is apparently a thing.
Mint Mobile Unlimited Premium Wireless. How to get 30, 30, bit to get 30, bit to get 20, 20, 20, bit to get 20, 20, bit to get 15, 15, 15, 15, just $15 a month? Sold!
Give it a try at mintmobile.com/switch.
$45 upfront payment equivalent to $15 per month. New customers on first 3-month plan only. Taxes and fees extra. Speed slower above 40 gigabytes. See detail.
Hey guys, Akil Stokes here with Tier1Trading.com. Welcome back to the Trading Coach Podcast. Thank you as always for checking out the show. Today, we've got some really important things to talk about. We're going to talk about overexposure in the market, what that means and what you can do about it. We're going to talk a little bit about correlating pairs. We're going to talk about risk management. We're also going to talk about the constant pressure that trading psychology has on you and how it could potentially lead to a massive meltdown, something that you don't want to happen. Lastly, I'm going to share with you a very powerful story that, well, kind of gives an example of no matter how good you are, or no matter how long you've been good, you're always at risk of blowing your account. That's the Thanos snap where he made everyone disappear. So let's hop into the episode. But before we do me a favor, right? To show your support, make sure you leave me a rating or a review. It takes a minute. Just leave a few words. Just click the star thing. But it massively helps the show grow. I keep getting more and more emails about how we're getting higher and higher ranked on whatever these podcast sites are. I still don't know what it quite means, but I like being the best. So let's boost us up there. All right, let's hop in. Real quick, Gartley's on pound yen, Canada yen, 1 hour 2. Any particular rule you have to become not overexposed when patterns form on the same time? Yes. So there are two rules of thoughts when it comes to being overexposed with not necessarily patterns, but trading signals. So for example, again, you're looking at these yen pairs and they're all the same, right? You've got, well, not all the same, right? But a lot of the smaller ones are going to be very similar moving, right? Usually they're very similar, but there's a chance where, yeah, especially the triplets, Aussie yen, Canada yen, New Zealand yen, Swiss yen, stuff like that are all doing the same thing. So there are two ways to think about it. One, you can make a rule. You can make a rule that says, I only take blank amount of trades on this particular cross, and once I take blank amount of trades, I can't take any more. So let's say, for example, your rule is I can only be involved in 3 trades on a yen cross at once. So pound yen, dollar yen, Canada yen. And once I'm involved in 3, if a fourth comes up, I cannot take a fourth. Now, do you guys see any problems with that? It limits your exposure, so you're not like Akil and you have 6 yen pairs at the same time and you lose $30,000, right? So it limits your exposure, your risk, especially when you're dealing with pairs that may be doing the exact same move. But what is the negative of that? What is the negative of having a cap on how much exposure you can have that way? Well, yeah, so our goal, right, as traders is to take every trade that meets our rules, right? When we do our back testing, do we back test and say, okay, I would take this one, but I wouldn't take that one? No, we're playing, right, law of large numbers. We're taking every trade that meets our rules. We're playing the probability game, understanding that bigger picture, that's going to end us being profitable. All of a sudden, if we are starting to miss trades, and we're going to have missed trades just by human nature regardless, but if we're starting to purposely miss trades, are we properly playing out our probabilities? So many P's there. I'm sorry. That's a lot of P's. But are we properly playing out our probability, or are we sabotaging it? We're sabotaging it, right? Because now, even though we don't mean to do this, we're picking and choosing which we trade. And we never know what trade is going to be a winner or a loser, right? If we did, we'd only trade the winners and we'd avoid all the losers, right? So we never know. We're playing the game consistently, knowing that the edge is in our favor and that we will win bigger picture. So I don't like the rule. I understand the purpose of the rule of like, once I'm involved in 3 yen trades, I don't take another one. I get it. But I don't think it's a good one. I think a better rule is this. So look at my portfolio on the right? It says euro dollar, pound dollar, euro yen, pound yen, dollar Canada, Aussie dollar, New Zealand dollar, Aussie Canada. In my portfolio, I've purposely only included 3 yen pairs because that is my max as far as like a single pair, aside from like the dollar, which reigns supreme and doesn't really matter. But you see 3 yens. Do you see 3 of anything else? Nah, there's 2 Canadas, there's a New Zealand, there's 2 Aussies, there's 2 pounds, there's 2 euros, right? I purposely, and before there was a euro Aussie which gave me 3 and 3. There was a pound Aussie which gave me pound Aussie as well, or pound New Zealand. But I purposely created my portfolio so that I can never be involved in more than 3. So because I only trade my portfolio, and because my portfolio doesn't involve more than 3 yen crosses, sticking to the yen example, do I have to worry about picking and choosing one? Do I have to worry about watching a perfectly valid trade set up and me saying, oh no, I can't take it? No, it's built in. So my recommendation is always this. Instead of putting yourself in a situation where you have to pass up on a good trading opportunity, because that's just a bad habit. We want to take good trades, right? We want to take every good trade. Instead of putting yourself in a situation where you have to do that, just create your portfolio around your risk tactics. Create your portfolio so that you're never in a position where you're going to be more exposed than you desire. That's, in my opinion, the best way to handle it. Because now you meet your risk profile rules and you meet your psychological rules of not needing to do something that you don't want to do. Because again, imagine yourself doing this. Imagine yourself taking trades on euro yen, pound yen, dollar yen. And then Canada yen and Aussie yen have patterns as well. Perfectly valid patterns, but you can't take it. How are you going to feel if euro yen and pound yen lose, the ones that you were in, and then Canada yen and Aussie yen win, the ones that you had to miss? What role do you think that's going to play on your psyche? You just took the losers and you missed the winners, but you should have taken the winners, but you couldn't take the winners, right? Now you're all over the place. And it's just another, another, again, I always think of your trading psychology as being like a dam, right? It's a dam blocking the water. The water is all the bad and evil thoughts that float around your head during trading, right? You have a situation like that where it makes a crack in your dam. And on the outside looking in, you don't really, a little hairline fracture doesn't play a big role. You're like, big deal, it's a crack in my trading psychology. But when there are millions of tons of pressure, evil, demonic thoughts in your head, right? Pushing against that wall, a hairline fracture is weakness. And that hairline fracture is going to start to kind of grow and build and fracture. It's like broken glass. If you ever guys have seen broken glass, as that constant pressure, because trading psychology is constant pressure. It is weighing on your shoulders the entire time. As that goes on over time, and as you get more cracks, eventually that dam's going to break. And that's going to be your psychological meltdown. And all it takes is one psychological meltdown to blow everything. Trust me, I've been there. I've been there where I've traded well for so long, and I've had one massive psychological break. Literally, I've had trading months that were golden, spectacular, right? Made mistakes during those months, yeah, but very, very profitable. And I've had meltdowns where, I don't know if you guys have ever been here, I just had rough days and just everything breaks down, and I just it starts probably with like a losing trade. And then I want to get revenge, and then I want to make more profit than I should to make up for what I lost, and then I exit early because I don't want to lose again. And it comes fast, and before you know it, that one day blows like a whole month of profit. It sucks, but it happens. It's just one bad day. And all it takes is one bad day, guys. One bad day to ruin everything you've worked for in trading. I'll leave you with this reminder. I've told this story before. The scariest moment in my trading, we were in we were hosting a trading workshop in Kansas City. Right? So we had this session. We had just went to Fogo de Chao. We done stuffed our faces. We showed everyone from the Eastern world how fat Americans operate. We stuff our mouth with as much food as we can, and we literally have a thing that is, if it's green, it means keep serving us meat. If it's red, it means stop. And peer pressure says never go to red. You always just keep serving yourself endless meat until you feel horrible. So we had canceled our afternoon session because we were all just like food hungover. Many of the Europeans were actually literally hungover because they were drinking since 5 o'clock in the morning because they're like, it's 10 o'clock my time. And I'm like, that doesn't work like that. And they're like, sure. And yeah, it was weird. So we're having this, we canceled our regular meeting. We just had a discussion. And I remember this one lady, I forget some of the details, unfortunately, of like the specific timeline, but it was a woman that had grown her account over years and years and years, had grown her account from like 100K to like 500K, right? Massive account growth. And I'm like, I'm still a younger trader. I'm teaching, but I'm still younger compared to now. I think I'm like, what was this? Probably like seven years into trading, so young relatively. And I remember looking at her, I'm like, man, that's inspiring. That's awesome. Like she grew her account. She's at a point where she can trade full time, and like this is the life. And I'm like, well, she's not happy. And she's like, but I'm like, oh no. She had one rough stretch and blew everything. And I shouldn't say one rough stretch. She had a rough stretch that started it. But she had a rough stretch, and that led to like a psychological meltdown. It led to like a lack of belief, and she just couldn't get back on track, and she proceeded to blow her entire account. Again, it wasn't like one day or anything like that, but it was like just a series of like compiling events, and she just couldn't get back on track mentally after the initial event happened, and she blew it all. She blew it all. Like she blew it all. Like, I'm sure she didn't go broke, but she blew it enough where like she had to stop trading, and like scared the hell out of me. Because I was doing some good account growth at this time myself, and like it humbled me. I wasn't cocky, but I was confident, if that makes sense. I've never been cocky in my trading. I believe that I can come and lose everything any single day. But I was working on like being more confident, and like I was believing that I was a good trader. It took me so long to believe that I was a good trader, guys. You wouldn't imagine. Like part of it is like my motivation, where like I'm that athlete where the coach needs to tell me how bad I am, so I can go out and prove something. So in my mind, I never wanted to admit that I was a good trader. Even to this day, I never want to admit that I'm a good trader because I feel like I would lose my fire. But I was getting to that point where I was starting to like be more positive self-talk and be like, hey, Akil, you are good, right? But still keep that edge of like, but you can lose everything, so you got to wake up and work hard. And this was a greatly timed wake-up call, because it was a big reminder that like no matter how good you are, because you could be good for 5 years and quintuple your account, no matter how good you are, it can go like that. Thanos, snap fingers, half your account gone. And I'm like, I do not want to get Thanos'd. And that kept me motivated. It kept me scared. But scared in a good way, where it's like, hey, you better start waking up at the same time and doing the right things. So, yeah, crazy. Hope you guys enjoyed the podcast. Remember, I got a YouTube channel. I do YouTube videos multiple times a week. Just YouTube search Akil Stokes. Make sure you subscribe. The staple of the channel is the Weekend Trading Edge video, where I share a few of the top trading ideas that are on my radar for the week ahead. But every once in a while throughout the week, I'll share random trading ideas or random lessons that we do in some of our live sessions as well. So make sure you subscribe, that way you don't miss. All right, until next time, plan your trade, trade your plan. Akil, out.